G'day folks, welcome back to the weekend review of natural gas and the ETFs. Now the charts are predominantly bearish, although do note there is a possible bullish retracement on the way. Before we go any further, make sure you hit that like and subscribe button to support the channel, that'd be greatly appreciated. And also we recently posted a video showing the CCI14, the CCI1500 and Heiken Ashi strategies, comparing like for like. So just reference that video if you want to get a deeper dive into some of the strategies we're utilising. And in terms of the outlook, as of today, July 27, natural gas fundamentals are moderately bearish at present. Ample supply and mild weather have pressured prices around $3.10 to $3.30, while production stays elevated and inventories stabilise. UNG currently signals a neutral, cautious positioning. BOIL may offer upside only in short bursts of upward price spikes, but carries elevated volatility risk. And KOLD may benefit if gas prices continue softening, though both leveraged ETFs suit only tactical traders, not long-term holders. So for natural gas, on the monthly, first off, we look at the price above the moving averages. That's bullish, but however, notice the CCI is broken into that moving average range, giving us a neutral signal. So avoid going long or short if you're trading on the weekly. Based on the monthly trend at the moment, it's uncertain. Also notice the fair value gap down here hasn't been penetrated yet in unfilled orders. So very likely going to see the price break further to the downside into that range, possibly in the near term. This could take weeks to play out, not necessarily days. These fair value gaps back here were filled with that wick of that candle, mostly filled, so just be aware of that. So at the moment, neutral on the monthly. On the weekly, it's bearish. Fresh breakout to the downside on the weekly. On the CCI, the price is already below the moving averages. And again, notice we've got a fair value gap untouched there. So bearish momentum at the moment on the weekly. We've got another fair value gap up there. That could take possibly weeks or even years to play out. So don't go placing orders on these fair value gaps. I treat them more like a support resistance range. But at the moment, bearish on the weekly. On the daily, it's been bearish now for a number of days, below the moving average of the price chart, as well below the moving average of the CCI. So again, notice also I've identified these fair value gaps more recently in the last few days. The price hasn't retraced, and that's where we may see the price retrace into that area. We had another fair value gap up there, hasn't been touched, so the price may possibly bounce a lot further from there. This one back here was penetrated, as you can see, with the action of those candles. If we go to the intraday chart, first off looking at the 1 hour, so taking short trades only, and you would have taken these short positions back here in alignment with the CCI going to the downside, until such time you saw this bullish divergence, higher lows versus lower lows on the price. And since then the CCI has bounced higher, going in more bullish momentum versus the price consolidating, and currently it's sitting below the moving averages, but notice that consolidation. So we might see a bounce possibly, and I've identified here a divergence target range that's in allowing for that bullish divergence to bounce. And if that does happen, what we do is we draw a Fibonacci retrace from that low to that high. That's at 23-38% range as a Fibonacci divergence target. Now that's that target. That also corresponds with this fair value gap being filled in the short term, as I mentioned, but also this wider fair value gap up here. The reason I've made it so wide is you've got a little one there and a few more there, and another one, a bigger one up there. So that sort of covers that whole range. So you might possibly see the price bounce a lot higher. That also correlates with this period back here on the daily. Now, if we go to the back test, taking short positions from around about the 24th of June, when the CCI broke below the moving average, and so did the price from that period back there, you would have let the short positions run on the 1 hour time period. Here we've got the stop loss approach. Now, how did you let it run through the whole period? That's actually about a break even versus the average down. So if you let it run through the whole period, that generated about 17,690. Now, I'm not suggesting you let it run through the whole period, because you would have been impacted with these drawdowns. That first one there, again following the 1 hour period and the same methodology, going short only when the CCI and the price are below the moving averages. So you would have gone short during that period, closed it out when the CCI and the price started breaking higher, going short again and stopping it out when the CCI and the price started going higher. Now you'll notice I'm zooming out here from quite a distance, a 50,000 foot view, because when you zoom in very closely, you can be a bit blinded with too much detail. So that's what I like to do, is to zoom out sometimes and sort of get a bigger picture, if you like. It's almost like a daily trend in a more micro view on an hourly basis. And so you would have avoided that drawdown you can see there with that rise of the price going against you if you're going short. Taking short positions back here, avoiding that little rise there, going short, and avoiding this rise again. And again, you would have avoided that drawdown. So for BOIL on the monthly, we've got bearish momentum below the moving averages. There's no CCI for it. But notice also we've got these fair value gaps which haven't been filled yet. And if they do get touched, is a very long-term play. It could take years for the price to reach those areas. So again, I've marked them there for a long-term play. On the weekly, we did have this bullish divergence versus lower lows on the price. It bounced, and now the price is also broken below the moving average, and so is the CCI, so continuing in a bearish momentum. Notice also we've got these fair value gaps up here again. If the price does start rising higher, we're going to expect them to get into these ranges possibly. On the daily, first of all, the trends are below the moving averages on both the price and the CCI. And notice we've got these long-term fair value gaps up here which haven't been touched. But in the short term, we've got this fair value gap here which the price may possibly retrace into that area in the near term towards these moving averages to fill those orders. If we go to the 1 hour chart, again, we take predominantly short trades, but just hang off for a moment going short if you're trading on the hourly, because you want to see the price below the moving average, which it is just sticking its nose below that at the moment. But note the CCI is above the moving average, giving us a bullish momentum. So wait for that to break lower below the moving average to take short positions. Otherwise, we might see the price start bouncing from there. This is the hourly chart, and if it does, we're looking at it filling. In fact, we've got another fair value gap highlighted there. From that point down to about there, so that hasn't been filled either. So again, we're very likely going to see the price retrace into that range. It's not a bullish divergence, it's purely looking at potential fair value gap movement. For KOLD, on the monthly, first off, it's below the moving averages, giving us a bearish momentum. There's no CCI for it really drawn yet. Again, notice these fair value gaps here longer term. Again, if it gets to that point, that's a long-term play. On the weekly, first looking at the trends, the CCI is above the moving average, and so is the price. So fresh bullish momentum at the moment on the weekly, meaning you can trade on the daily based on that. And also notice on the daily, the price and the CCI above the moving averages. So taking long trades, again, you would have been wise to start opening that trade there on that candle if you're going trading on the daily, and you'd be in profit at the moment with the price above the moving average, and wait for that CCI to break into that moving average range to close out that position. Also longer term on the weekly, we've got this fair value gap, so the price possibly may get into that range. That could take weeks or even years to play out. And on the daily, there's no fair value gap to identify there. If we go to the intraday chart, the 1 day chart, the 1 hour chart, I should say, again, taking long, if you're trading on the hourly, go long according to the daily. So at the moment, you would have been wise to go long when the CCI broke above the moving average range on that candle there, and so was the price. And you would have closed it out once on that candle and then reopen it there, and you'd probably be about break even. In fact, you might have had a small loss if you're trading this when the candle, actually you would have had a little gain on that little period there. You close it out when the CCI breaks into that moving average range on that candle up there. At the moment, avoid going long or short until this confirms breaking to the upside on the CCI as well as the price, only trading in direction of the daily. And finally for UNG, on the monthly, it's broken below the moving averages, but avoid going long or short because the CCI is just in that moving average range. So it's a bit early to go short according to the CCI if you're trading on the weekly. We did have a little bullish divergence there. The price did rebound, but didn't go quite as high. Now, it depends where you draw the Fibonacci. If you draw it back to that high there, and it's normally done at the previous high before the divergence started, you can see there it touched the 61% range. So that divergence actually worked quite well, although it was very almost very sudden after the month after that divergence completed. That's the monthly. On the weekly, we did have another bullish divergence here. The price did bounce, and at the moment it's broken below the moving averages on the price and the CCI, taking short trades only. We do have a fair value gap up there, which I've identified. That hasn't been touched, and again, that's a very long-term play. If the price does start moving in that direction, there's a potential resistance range. On the daily, bearish momentum at the moment, price and CCI below the moving average. We've got a little fair value gap identified there, and possibly another one in there as well. So the price will likely retrace in the short term to the upside. but at the moment taking short trades only on the daily based on the weekly trend. If you go to the intraday chart, taking short trades only in accordance with the daily, again you can see there you would have taken that short position on that candle once it broke below the moving average, and so did the CCI, and you would have closed it out on that candle there and then reopened it there and closed it out. It would have been a break even on that one, and avoid going long or short at the moment because you want to go in the direction of the daily if you're trading on the hourly, which means you want to wait for the CCI to break below that moving average range as well as the price, because you want to go in the direction of the daily trend, which is short. So even if the price breaks higher, you can trade that, but again, very cautious because the momentum is going to the downside. Remember, follow the +1 videos to understand our strategies with a lot deeper dive. Hit that like and subscribe button to support the channel. Thanks for watching, and see you in our next video.